Good morning, everyone. Hey, trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Lovely ECN that offers traders Forex, but also energies, metals, indices, and binary options. We do these sessions, these are strategy sessions, Monday through Friday here at Forex.Today, and every Friday, which is tomorrow, at FX Street. And tomorrow is Non-Farm Payrolls Live number 113. I think I've been doing 113 months now. You're welcome to join me over there. Let's go. Boom! That just happened. Hey, stop having fun. All right, so how's the trading been going? Oh, you know what? Before I ask nice questions, let's jump on to the news. So Japan just finished their meeting. And guess what? Shocking. They discussed quantitative easing, but they didn't do it. They said they need it immediately, but they didn't do it. They need more data. Well, that's what I've been saying forever. So guess what? They're going to do it, as I've been saying. I've always been saying they're not going to do it at this meeting, but October 30th, I think, is the next meeting, and that's when they're going to pull the trigger on the QE. Dang, I like being right. So anyways, yen's strong right now. Yen. Rod says he has it in his diary. Right on. So cool. Lufletolumum. There's our friend, the euro. My friend lately has been more British pound than euro. Not a great pattern, if you ask me. You know, one of the things that I like to see is a trend. When I look at this, I'm like, is it up or down? Well, if you're going to use an indicator, okay, we're below the 200. And this looks like it might be a reset, new lower low. By the way, what do you do after a lower low? I've forgotten. Boom. Okay. So here's your entry here. But now what? Okay, the easy stuff's out of the way. But now what, right? Is this support? Yeah, it's a monthly support pivot. It's a weekly support pivot. It's price action support. And that's that. You could almost just do... Come on, don't fight me. I'm bored. All right, hang on. We'll do it this way. We might just be in for something like that. What do you think? I'm going to treat it like we're still in a range. Now, fundamentally, I'm more bearish than bullish, right? But I don't know. I love looking for the free money, right? The easy stuff. I like to go fishing when the fish are jumping into the canoe. I'm like, I don't even need a fishing pole in this one. So yeah, you know, you can make some money on this, but you know, I wouldn't. It's not. I don't know. It's not long term yet. But I'd much rather be a bear than a bull. So let's take a look at some of these patterns. Does this look like a drop to you on a 15-minute chart? Yeah. Now, would you consider that a bearish move and that you would try to catch the trend? Yeah, of course. What do you think? 382 Fibonacci retracement? Yeah. Cool, right? I'm just trying to emphasize that, we go over this stuff day after day, and I hope it starts clicking, like you, there's less aha moments and more like, holy crap, I'm actually doing it moments. Rod made some pips because of my teachings. Cool, right on, Rod. I guess that's the whole point, right? Yeah, Mike's hanging in there. So anyways, down, 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 up, up, down, 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 up, up. Cool. This is just a little fake and bake in the Asian session. It happens. Thinner markets. But like one of these things, like we talked about this yesterday a bit briefly. Um, if you shorted in here off the 21, it's all right. If you shorted here, you should be fine. But I bet you a lot of people get knocked out on this move, right? And yesterday I talked about getting rid of your. Really, what I'm doing is cutting out some of the variables in your trading, so we can analyze whether your trading is decent or not. So I asked you, use a demo or lower your lot size and do something like a 100 pip or 150 pip stop loss. Something what you can't just get knocked out on some, noise per se. So if you'd shorted here, if you shorted here, and all that kind of stuff, you would not be knocked out on this trade, right? You'd still be short, right? And profitable. Okay. And I want you to like hang into your trades long enough that they can work out. Now you're going to be wrong, and I don't want you to be stupid on those types of trades. But I do want you to stay in your winners, especially for any level of pips, because a lot of people would have got knocked out of this pullback and missed the 382 because they traded early, or they traded, they were up 25 pips or something, then it came roaring back and you freaked out, and you got knocked out of break even. Or you got that giant 8 pip win, right? Versus just staying in the trade. And really the trade is not just this 382, right? What have I been teaching you? It's really the 382 to the 618, and then you see the monthly pivot cluster up here and a roll reversal. So as long as it's low, right? As long as it's lower than this, you should be short and confident. If there's a fundamental bias or some sort of trend bias for down. And I would believe you if you said you had one. And that's all you're trying to do is stay in. Not be dumb, not use giant stops to make up for your lame entry. Right? I didn't say that. A wide stop is not an excuse for piss poor entry. But if you saw a lower low and you were preparing for a lower high, and you believe the long-term technical or fundamental trend is down for this pair, then then this is a decent trade and you want to stay in it. That's all. Rod, since hanging out with us in our webinars, he's been leaving 1/3 of his trades running forever. Cool. Well, I hope you catch a trend. Yeah, when I first start working with traders, I'll ask when I'm sort of assessing the situation, I'll ask them, have you ever had 1,000 pip month? And invariably, a trader will look at me, well, over Skype. You can just hear in their answer, they're like, "Are you kidding me? 1,000 pips? Like what a dumb question, Wayne. That's impossible. How could you have 1,000 pips, right?" And they're right. Generally, in the way that they trade, they'll never make 1,000 pips. It's inconceivable. And then, usually within a first few months of working with them, they make their first 1,000 pips. And and then I say, well, you know what? Your minimal acceptable performance should be 1,000 pips. And that on months that the market's really moving well, you might make 2 or 3 or 4,000 pips, or 10,000 pips, right? And if you're not setting yourself up to be able to do that, I don't think you'll ever make huge, giant money, the kind that very often new traders are dreaming of, right? You want that giant yacht with the helicopter on it, right? You want the fancy Italian sports car and the giant watch with diamonds on it. And yet your trading, if you just analyzed it, statistically, just looked at it and said, what do I have to do to make that kind of money? And what you should see, what 99% of traders will see, is it's impossible doing what you're doing. And that's making, 3 trades a day, making 25 to 50 pips on each trade, right? And then you add it up, you're like, your best month, if everything goes right, is maybe 2,000 pips or 1,000. So there must be a different way, because the only way you're going to get your 100-foot yacht with a helicopter on it is to load the boat with giant lot sizes. And of course, I'll tell you this now, that's the secret to failure, not success. Yeah, so what I'm trying to say, Felipe, he's saying, 1,000 pips a month, that's 250 a week, that's 50 pips a day. Oh, that's totally achievable, right? Absolutely brain dead achievable. Not easy to do, but it is achievable. But how does someone make, let's say, 5,000 pips in a month, Felipe? Well, the obvious answer is instead of making, right, you just have to make 250 pips a day. But you're like, well, Wayne, come on, now you're going to have 5 50-pip winners, and you can do that, but do it every day. And no, the way to do it, and you're going to get sick of me, I guess, because it's the same message I've been telling you every day for years. You need to think and act like a professional. You need to have a fundamental bias. You need to put trade plans around that fundamental bias. You have to have a marketable trading idea, and then build a portfolio around it. One trade, one day, 1 week at a time. And if you can catch a trend, and you have dozens of trades open, every trade at break even, you have 100% available margin in your account, and the yen pairs have a great day and they're all up 150 pips, which absolutely happens on a fairly regular basis. But you have 12 trades open, let's say, and they all move an average of 100 pips. Some move up 200, maybe some only move 75. But that's over 1,000 pips for the day. But an amateur trader, out of a 100 pip move, is only trading one trade at a time. Didn't see it coming because there was no long-term fundamental or technical bias, or not even paying attention to the Bank of Japan's meeting today, right? And the market starts taking off, so they're late. They wait for the pullback. They sell the retracement, right? And they squeeze out 50 or 60 pips out of a 100 pip move, and they're done for the day. You see the difference, guys? So a really good trader acting like a retail trader on a great day is going to squeeze 60 pips out of a 100 pip move. Very logical. Where a professional would have squeezed out 1,000 pips out of a 100 pip move. You see what I mean? I don't like calling it pyramiding. That sounds like a scheme. It's just a portfolio management methodology. Right? So I take it all back. What's your marketable idea? What is your analysis of the foreign exchange market? Okay? So I'm just trying to drill it home. It's vitally important. And the longer you delay, your ultimate success. And don't get me wrong, it's not an easy thing to do. And Forex can be frustrating because you can get in situations where nothing happens for 3 or 4 months, 5 or 6 months. Last year, I had to wait something like 8 months to rebuild my portfolio. And then September, October, November was just like, I don't know, like heaven. Okay. Message received. So, who was it that said they were holding 1/3? Was it Rod? Yeah, I think it was Rod. Yeah, Rod. So, how many are still open with your stop at break even? You have 1 or 2, 3 or 4, 5 or 6, 10 or 12? Okay. Singapore dollar. Are you in Singapore? Oh, okay. Very interesting. Going for the exotics. Yeah, it's the Asian Switzerland. All right. I'm so overdue for a trip there. So I'm going to fly out, meet up with Daniel, get a suit made. I don't think you go to Singapore just to buy suits, though, but I know people that know people. Or where would we have to go, Daniel, to get a suit made from the right person? Yeah. But you got connections, right? No, not London, Eric. Yeah, Bond Street or Civil Row, right? A nice bespoke suit. So anyways, let's move on.com. I'm just talking about Daniel because Daniel knows people. I think if he walked into the right place, people would stand up straight. It's Daniel. He knows people. He's like, I'm sure Daniel would say, this is the place. These guys are the best. All right, so I know a little off topic. One of the most interesting things I've ever seen was the beginning of a movie for what was that guy that used to play James Bond? The pretty boy. Pierce Brosnan. He was in some movie about Panama or something. I don't know. The Tailor of Panama. I mean, maybe that's what it was called. Something like that. I'm not recommending the movie, but the only thing I remember is they did like one of these time lapse scenes where in the in the course of maybe 2 minutes, you see about 8 hours worth of work or something, and you see a tailor. He rolls out a bolt of fabric and he starts chalking it up to cut a suit, and it's amazing. I remember seeing that, so I did some research on what a tailor needs to do to make a fine bespoke suit, and it's something like 8,000 stitches to do the lapel, so it folds just properly. Just amazed. I have the utmost respect for a tailor that can do it by hand. Now it's all computers, I'm sure. All right. So, anyways, pound yen. Okay. If you're thinking about buying it, you're at support. Monthly M2. Yeah. And remember, these are new pivots, right? Eric says it took the guy 3 months to make a sandwich. Yeah, the Japanese can be that way. I remember being in Tokyo for the first time. I'm like, I want Kobe beef. So we go to like the best place in all of Tokyo, and it was like a ritual. It was like a a church for beef, and it took like 9 hours for them to just cook it. I'm like, come on, dude, I'm starving. Just give me a steak. Oh no, the oil had to be poured in just the right way. It had to go counterclockwise, and I mean, everything was so perfect. The way that you poured the oil on the grill to heat it up, and the way you had laid out the vegetables had to, that took 3 hours to do the vegetables. I mean, it was pretty funny. The Japanese can make anything complicated simple, but they can take anything that's simple and make it complicated. And that is not an insult. All right, I just killed that by accident. Too bad. What do we want to do? CAD yen here? No, dollar. I guess we got to do dollar yen. What do you think, guys? Fabulous opportunity, right? You know, it'd be interesting to do would be to overlap the U.S. bond market and the Japanese bond market over top of this USD yen. And this, to me, looks like a giant tug of war. That's all. So, are people buying bonds or selling bonds right now? Yeah, it seemed to me, what, the 10-year T-note, what, maybe a month ago, I don't have the data in front of me, was paying, what, almost 2.22? Now it's 2.06. So the bond market has gone up. Uh, Ron asks an interesting question. Why would someone buy a negative interest bond? They generally wouldn't unless there was dramatic fear in the market. Okay? And generally, a central bank won't allow for that to happen. Okay? So, for example, at the Fed, they control the Fed funds rate. Now, one way of doing it is to enter the market through open market operations, right? The Fed basically picks up the phone like everybody else, calls one of the 12 primary bond dealers in New York City, like everybody else, and buys and sells bonds, like everybody else. There's nothing special about the Fed except they have unlimited amount of money, which if you're a trader is an advantage. So anyways, they can call it, but that takes some, effort, right? But what else do they control? They control the discount rate, and they also control the deposit rate, which is now happening, which several central banks are doing now, where they're paying interest on reserves. And these things also create floors and ceilings and stuff. So the Fed funds rate right now, the Fed funds rate now is somewhere between 0 and 25. And so what they're creating is that interest rates can't go zero or can't go negative in the United States. Just won't be allowed. And then the next question is, and why would anyone want to buy one? Well, Switzerland, for example, has negative rates, and they're trying to get people not to buy their bonds. Yeah. Oh, I get it. But that wouldn't generally be something that you would want. All right, let's move. Let's get off these. Let's go to the buck. That's correct. Yes, Felipe, that's why they did it. They don't want people to buy their bonds. They don't want you to park your money at their banks, I suppose. All right, so here's our pig dog. Still moving in our direction. This is what I was saying earlier that, generally I've been, selling off the pound a lot more than I've been selling off the USD. But the dollar's not strong right now, right? Why do I call it the pound of pig? It just came from the point where a million years ago when I was coaching people on how to trade Forex, the dollar was a dog with fleas. So I would call it the pound dog. And then there was a time when, there's a giant sell-off in the British pound and, pigs get slaughtered, right? So it was a great British pig. And then you had to put them together, right? And you got yourself a pig dog. You also had a ham and cheese. Can you guess what the ham and cheese was? Pound Swiss, yeah. Pound Swissy. And then it was just easier to call it pissy than the pound Swissy. So anyways, the ham and cheese was the pound Swissy, right? The pound Swiss franc. So anyways, this is moving along. It's paying in US dollars. It's been a nice ride. But right now, if you look at USD yen, so here's how you do things. You're watching all the majors, right? One of the things you're eyeballing is this giant drop in pound dollar. But you're also watching USD yen. Okay, you got to get off this one maybe. All right, here we go. That's a better one. You're also watching USD yen. Which one's stronger? Japanese yen. So the way that I trade is I wake up in the morning and I'm going to sell the pig. The pig's been paying like very nicely. I mean, it's probably been my favorite, I'd say, in the last 6 weeks, right? So anyways, I want to sell the pound, but right now the yen is much stronger than the dollar. So that's how you get yourself over to the pound yen. And that's called relative strength. Okay. Okay. Breakout, retracement, gone, right? Beautiful little 382. You have a, oh, you're worried about the monthly pivot down here? How? That's like from where you should have shorted this. Let's say 81.50. That's like almost 200 pips away. I wouldn't be worried about that. And clean some of this up. Look at that giant pullback. Remember, we were talking about this. If you're a bear, you sell up high. If you're a bull, remember I had it fibbed up. You'd buy it low. Well, it came all the way down, kicked off support, went all the way up to the top of the channel, and then came down. Very interesting. Both bulls and bears would have made money. So 1, 2, 3, 4. 1, 2, 3, 4. It's 2 hours ago. 1, 2, 3, 4. 1, 2, 3. So what happened about 5 hours ago? Yeah, the London market opened. So all you had to do today was sell it. And this is the London Open right here. Okay, it was precisely 50% retracement. Cool. You are the one. All right, let's take a look at what. Just glance at some of the commodities. Mike, if you were a bear on the pound yen and you were at your charts at the London Open, you could have done it. It would have been easy. You would. There's only two things you can do. You can buy it or you can sell it. But if you're a bear, all you can do is sell it. And I think just through confirmation bias, you would have found a reason to sell it. It's that you can't have confirmation bias if you don't have a preconceived notion. Therefore, nothing would have happened. Or worse, both. Yeah, but you have to. You're right. I know what you're talking about. That little zigzag, but time of day is supremely important. Go back, Mike, and go through your charts over the last 6 months and identify the London Open candle every day and find out how many times it was basically the top or the bottom of the market, depending on what direction. Well, you say you're generally all over the place because you see too much. Well, see, you should already know what you're going to do before you even open up your chart. So I couldn't give a damn about the little bit of a high or whatever it is. You're supposed to do one thing, and that's if you're a bear, you identify 3 levels of resistance: 1, 2, and 3. Okay. And maybe they're just a fib, 382, 50%, 618. I really don't care. Maybe there's a psych level, maybe there's a previous, whatever. And so what you're saying is, well, there was a move up, but it didn't quite hit resistance. And then we went through the Asian fade. Nothing happened for 6 hours or something. And then it spiked up and hit your 382 right at the London Open, and then stopped going up. In fact, started going down. So, but let's say this first one failed. Well, get ready. You're going to sell it at this level. And if that fails, well, get ready because you're going to sell it at this level. But you can only sell it, so it's not complicated. The only thing complicated is anything that you're folding into it. So, are you bull or a bear? Bear. Do you sell or buy? I sell. Do you sell high or do you sell low? I sell high. At resistance. Great. Identify 3 levels in resistance in which you might want to sell. And that's it. After that, it's not. Right? After that, it's not complicated. All right. So here's what we were talking about with the stock market. Still haven't got that, but we have a new month. So, okay. The market decided to want to sell off into the new month. Okay, fine. So we'll see what happens here. Obviously, this is a daily chart. We're well below the 21. I'd like to see this double bottom hold for 2 reasons. As I explained before, more people make money on the way up. And also, it seems to me the 55 is in control here, which shows weakness in the downtrend. It's a new month. Once we get a half decent non-farm payrolls tomorrow, and then followed up by a mutual fund Monday, hopefully we're working our way north again. Okay? So I think we're still on track. No need to hit the panic button yet. Here's gold, remember, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy. And is this right, or do I need to change contracts? I have a feeling, I have a feeling it's time to change the contract. Let's go here. And it's all right. So then up, 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 down, down. So, and then another up, up, up. And then does this look like a change in trend? Well, first of all, you would have had this long if you're a bull. It came up, came down 50%. You would have bought it, and then it collapsed on you. Sort of in here did the same. It's a giant red flag. But in here, we never really truly made a real lower low. But I think we have made a lower low here. So I would call that a change of trend, and now it's time to like look at the market heading down, not up, right? Before it was doing this. And then right in here is the reversal, which is cool with me. That is predicting dollar strength at some point. Let me double check this. Yeah, guess it's fine. Is this the right price, guys? Yeah, all right. So we're just hanging out here forever, huh? Yeah. So again, not. I think there's other things I'd like to do with my money than sell oil. So hopefully S&P 500 stabilizes. If it does, let's say over the next 4 days, dollar strength, yen weakness, maybe some oil strength, maybe some gold weakness, maybe some CAD strength, maybe some Aussie weakness. Well, we'll see. Baltic Dry Index hit 888 today. Ooh, very auspicious. Down 1.3%. Amazing how that's gone. Did you guys catch the Challenger report? $58.9. Yeah. So got to adjust my model. Has everyone read the article that I wrote for FX Street on how to create a model for non-farm payrolls estimation? I guess another way of saying it, how to guess the headline non-farm payrolls number before it happens. Well, let's see if I can get this for you, and I'll share it with you, but you have to promise me you'll give it a like. Okay, hang on. I don't know. It was the most popular content on FX Street for 2 weeks, but I wrote it a month or two ago. Well, actually, I wrote it several months ago. It only came out a month or two ago. Trying to see if I can find it. I got it. How to prepare for and trade the employment situation report. All right. You have to give it a like. See? It's quite detailed. All right. So that's that. And by the way, it talks about the Challenger report, what it is and how to use it. Yeah, no, for every non-farm payrolls, this is how you come up with the model. So you know how they say the market expects the headline number to be 222,000? This will teach you how that number is derived, or actually how I do it. And I wouldn't be shocked if I was a little more accurate than the market's estimation. And one of the reasons I'm more accurate is I do use the Challenger report, which is here, number 5. Okay. And then I give a couple of different strategies for actually trading non-farm payrolls, stuff like that. But I mean, that's what I'm known for, right? I'm the king of non-farm payrolls. Undisputed king. You know what? We should probably do a little of Aussie yen. I think that's where we left off yesterday, wasn't it? Well, Jaroslaw, I guess self-proclaimed, but um, I don't know who else would it be. Well, how about this? The CEO of, or the founder and former CEO of FX Street, the most popular Forex website in the world by far, times probably 100, has said that my non-farm payrolls webinar is the most popular webinar in the world. So I guess it's not self-proclaimed, um, but anyways. All right, yeah, so we left off yesterday on, where's the analysis? I think it was this one. And I believe this was a buy zone, this purple area. No, I think I took a 4 pip loss on it just because I was messing around. But what do you think? Right? Up, down. Of course, I had it here, see? Remember, this is a guess. But this used to be resistance, 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 so maybe this area will be support. All right, it's not perfect. Right? It's not perfect. Is it within reason? Look it. It made a 618 Fibonacci retracement. So the move went from 382 at the Asia Open. Now, why would it move at the Asian Open? Well, because both currencies are Asian, right? Australia is the Asia Pacific. When do you think banks, like what banks do you think trade a lot of Aussie dollar? Could it be Australia? Right? It could be. I'm just throwing it out there. Crazy idea. Maybe Australia trades a lot of Aussie dollar. Yeah. So, anyways, it came down to 84, which is the psych level, and it went up to 85. There you go. Mike, are you calling this a double top? Okay, that can't be a double top because there's no trend. So it's resistance. It's not a double top. Double top is a reversal pattern. What would this reverse? There's no trend. Not on the hourly, anyways. All right, so we're just monkeying around. Okay, so yeah, it could be resistant, sure. But what I like to think is it can go up forever until it stops going up. So I wouldn't buy it in the gray zone, Mikey. At the top here, I wouldn't buy it at the top. But of course, I would never buy anything at the top. Okay. So what you could do, and of course I started everything like this, I look at this as a potential buy zone. First and foremost, it's just a guide. And then I drop down a new fib area. This whole area is buyable. It's viably. Okay. So now I look at my oscillator. If I went long now based on the oscillator, would I be a fool? I'm not going to pull the trigger, but does this say, whoa, there's no way you should be waiting to buy this? Or does it say, yeah, green light, you can wait. You can certainly prepare to pull the trigger if you want. Yeah, it's definitely green light. Doesn't mean pull the trigger, but you got permission to engage. So what I can do now is drop into a Cinco and wait for something in here. Something that grabs my eye. Is there too many lines here? Probably no. Let me get rid of this one. Okay. I'll get rid of this one because it's incorporated it with the 382. Get rid of this one because that's yesterday's 100 pip profit. Oh, gotta redraw it. Hang on. Okay. And so now I'm on the 5-minute chart, sitting around waiting for a reason to buy. So it seems to me someone already bought this at the 50%. What do you think? It seems like I drew this pretty precisely at the bottom, and then I'll zoom at the top. I think I drew that pretty precisely. And look at this. At exactly the 50%, somebody bought it. So, is somebody watching this? Is somebody watching the fib levels on this pair? Well, okay, so some of you guys are saying, well, you know, you're going to buy this, isn't that, you know, and it seems to me you're in between. If I'm a bull, I'm going to buy this. If the market is bearish, I probably won't get a setup on this trade. Or if I do buy it and it does collapse because the market is bearish and I'm wrong, I'm not going to lose very much money. The only complication is if you're a bull and a bear. That's complicated. I don't know how you'd possibly trade. So I look at this, and yesterday we had the same setup and it made 100 pips profit. Well, you know, good enough for the girls I go with. So it made a higher high. Now, maybe this reversal area here reverses it. All right, cool, fine. But if this reverses, I'm probably not going to get a decent setup. But if this double bottoms at the 50% and then gives me a little green light, little 1, 2, 3 on a 5-minute chart, I'm going to take the shot. What am I scared about losing 25 pips? Just doing my job. Okay. But if you're a bear, if you're a bear, you're going to need to sell it up here, right? So you're already sold it, or you're setting it up this way, which is just as fine. Now, if you're setting it up that way, you need someone to buy it up. So you want a guy like me to buy it up. Okay? So you just need to ask yourself, are you going to sell the 382618, or are you going to buy the 382618? Right? Which one are you? This is bullish. This is bearish. And if you want this to move up, you're going to need a buyer. But where you get lost is trying to do both. And of course, that's not going to be a successful strategy. So initial jobless claims, you know, about right. 4-week average is 270, and this is 277. It's not a good number, but it's not a bad number. So, Mike, what trend do you see here? Right. Yeah, I don't see a trend either. Yeah, the trend is sideways. Well, one way to do a trend, I have a trend indicator. It's proprietary, so don't steal this from me, okay? So the long-term trend on the 4-hour is still down. See? That green line is the trend. Look at this trade. Good, huh? Down, down, down. No, up, 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 down, down, boom. Just love it, man. But what is more important is at the moment is where we are, right? Momentum in the moment. and momentum is sideways. But you could sell this. You could totally be a bear if you want to be. But what am I looking for? And I grump about it. I think I grumped about it today when I grabbed the charts. If I'm a bear, let's say I'm a bear on this, and I could see reason to be bear, both technically and fundamentally, fine. I want to see a market that does this. Okay, to me, that's the trend. Lower low, lower high, lower low. This pullback here was way too much, way too high, and then there was no follow through low. It didn't make a lower low. We're in cardiac arrest. Okay? Because to me, a trend for me to trade, I look at this that I just drew, and I say, okay, it's a downtrend. Price comes up. Guess what I'm going to do? I'm going to sell it. And that's my bread and butter. So a few people read the article. Anyone else need this link? How to prepare for and trade the employment situation report? Remember, you're obligated by law to leave a like. Someone gave it a thumbs down. Yeah, imagine this, that I spent several hours writing this report, and it's bad. What kind of person would do that? Yeah, so someone here gave it a thumbs down? Yeah, all right. Very nice. Thank you. Very kind. All right, so any last currency pair? I got a few more minutes. How else can I help? Aussie dollar? It'd be much the same. CAD? Yeah, well, I'll do CAD because CAD is trying its best to recover, isn't it? Can't hold Canada down. ZAR. Yeah, I actually created an index for every major currency pair. I have one, but not on this computer. I don't really use it anymore. It's not exotic, it's toxic. Hey, you want a good time? Watch one of the live videos of the South African Central Bank. Yeah, I've actually watched videos, watched the live press conferences and stuff. The South African Central Bank. These are the things I do. And it's like, I don't know, it's like watching a movie that was made in the 1970s. Oh, there's the 1970s. I wonder where they went. They've been in South Africa this whole time. Do you have a link for that? Oh, you're talking about something else? Okay, well, all right. So let's try to make sense of this mess. All right. Let's add something. Let's add a custom indicator. Boop, boop, boop. And today's a new month, so we could look at something like a monthly pivot point. What do you think? Look where the market reversed on the last day of the month. The only thing you see on this chart are monthly pivot points. Oh, a currency power meter. All right, we got to be careful, guys. This is, yeah, you got to be careful. I've seen all kinds of such tools. So let me explain this, I guess, and then you could do it for yourself. I'd rather you just know how to do it than rely on some tool, because I've seen many tools that do this, and their methodology every time is different, and um, in many cases unreliable. He takes in, well, right. So let me just tell you how to do it. Let me tell you how I did it. Okay, you start with FXM dollar index. Okay, that's the key because it's a weighted or it's a balanced index. In their index, they have the same amount of euro as dollar as they do Canadian dollar as they do Aussie dollar. Okay, where typically the typical dollar index, which is owned by what, Dow Jones now, they have this weighted index, and the index is like 40% euro and like 5% Canadian dollar, something like that. You're like, what? So if euro comes down, basically the whole index comes down. You're like, well, that's not cool. Seems like it's almost a euro index, right? So you take that, and then you can take one, you can take the data of the Canadian dollar, let's say, and base its relative strength or weakness on the balanced dollar index, creating an index because it's now the Canadian dollar versus everything in the dollar index, which is an equally weighted balanced index. So you can see, is the Canadian dollar strong or weak relative to all other currencies? Is the Australian dollar strong or weak relative to all other currencies? And so on and so forth. And so I created indices for each of the majors, with the primary input being the equally weighted balanced FXCM dollar index. And that's the methodology. Is the Canadian dollar going up on, relative to everything else in the basket? Yes or no? And if so, by how much? And that plot that out as an index. Okay. The thing that you need to make sure is that you're looking at the same time frame across, right? Because, you know, you could have the Canadian dollar strong today, but it might be weak right now. Okay. So, but whatever. But isn't this interesting pivot point wise? So, where are we now? And is it of any interest to us? We are at the brand spanking new monthly central pivot point. Rod says support. Well, is the central pivot point um, just any random level of support? No. So if I'm a bull, okay, and one thing you can look at this, here's a tip of the day. You want a tip? Last month's central pivot point, this month's central pivot point. What might the trend be? And the reason it moved up, it's not really a trend issue at all. It has to do with where we closed. Because to create the central pivot point, it's not the high and close divided by 2 to get the average. It's the high, low, and close divided by 3 to get the weighted average. Okay. And by the way, in my book, I said if M2 is the bottom, that's M2, what's the predicted top? That's what I wrote 8 years ago. Look at, this is M4. M2 to M4. Interesting. This is when you scratch the hair on your chin. You're like, interesting. So anyways, it closed high, right, relative to the open. So anyways, so the new central pivot point's higher. And for many, they'll look at that and say, bull. Okay. If you're a bull, your buy zone is somewhere between the central pivot point and the M2. Your target, if I can squeeze it in there, it's not good for Canada. But of course, this doesn't have to head up. It can do whatever it wants to. I'm just trying to use pivot point theory to show you a different way. Boy, I really had to squeeze that in there. Therefore, the range here is going to be the zone we're at now to the red zone up there. If we kick off the monthly pivot point, and that's the low for the month, it's going to go to monthly R2, which is the very top. Okay. If it comes down a little farther and hits M2, and then M2 is the bottom of the month, then M4 is the target, just like we did last month, M2 to M4. Okay? But, okay, so if it heads up now and stays up, we're going to move that much. And if it goes down a little more before going up, it's going to go up that much. Either way, it's going to be worth that much. So let's calculate. If this is a bullish trend, let's say it comes down to 32, and it's going to go up to 36 and a half. Right? So it's going to go up 450 pips this month. Interesting, huh? Which another 4.5 pennies for Canada is a lot to lose. So I hope to see you at FX Street tomorrow. Must have been the guy that said I was the self-proclaimed king of NFP that gave me the thumbs down. Let's see. So let's go to the FX Street homepage. And oh, registration's not up yet. It's interesting. Pretty soon it'll be right in there where you can register for non-farm payrolls live. You can probably do it here. And there it is. And get you that. 523 people registered. It's not bad. So anyways, thank you for being on my team. And thank you for those that gave the thumbs up on that article. If you think about it, it took me 10 years to come to that knowledge through blood, sweat, and tears, and then it took me several hours and writing it to post it up there. So putting a thumbs down is pretty lame, but you know, I appreciate you giving back by clicking the thumbs up. I don't know, I don't know, but it took me years and years and years and years to come across that information, then hours and hours and hours to write it to share it with you. So seems like it was a decent use of, I mean, I could have played with my kids. You know, I could have spent 3 hours playing with my children, but instead I wrote that article to help. So I don't know. Peace on earth. May the pips be with you. May your profits be above average. Well, if someone did thumbs down it by mistake, you can undo it. So anyways, take care of yourself. I'll see you at FX Street tomorrow. Thank you to Forex.Today for hosting us all week. And remember, yes, maybe I'm doing these events for altruistic reasons, but the bottom line is, you know, at some point, I'm hoping that you develop confidence in your trading and your skills because of the information and training that I've been offering to you, and that one day you'll pay it back by opening up a live account at TradersWay.com. I mean, that's the whole point. And even if you only got $50 in your wallet, I don't know, opening the account anyways, $50 isn't going to change anyone, but it just shows that that you do care and you want to keep these webinars going, and it's a good way for us to track, or for TradersWay to track whether it's, you know, worth investing into. So take care, guys. I'll see you tomorrow. Cheers.